The information and opinions expressed in this video are of a general nature and are not intended to be investment advice, research, or recommendations. Please consult your investment professional for your own circumstances. The information in this video reflects the opinions of Arca Labs and the video's participants on the date of production and are subject to change at any time without notice due to various factors. Arca Labs is separate and unaffiliated from any third parties participating in the video presentation, and Arca Labs is not responsible for any third parties' products, services, or policies.
Welcome to Tokenization Talks, powered by Arca Labs. I'm Annelise Osborne at Arca Labs. We are focused on innovating responsibly, and we are excited to bring you institutional thought leaders in the digital asset space. Our guest today is Morgan McKenney, who is CEO of the Provenance Blockchain Foundation. Thank you so much, Morgan, for joining us today. I appreciate having you.
Greetings from London, Annelise, and thanks so much for having me.
Thank you. And we're doing this on a Saturday, just so everybody knows how focused Morgan is and busy. But so for listeners who are unfamiliar with Provenance Blockchain, I have a few firsts, and Morgan is my first non-institutional guest. But I think what they're doing is really bridging the gap between institutions and blockchain, and they've been created the first use cases, I think, from an institutional perspective. So in collaboration, Provenance Blockchain and Figure, they have had the first HELOC and mortgage origination and custody on a public blockchain. They are the first to instantly settle mortgage loans on a public blockchain. They're the first to securitize consumer loans on a public blockchain. They're the first public blockchain US regulated banks. They're the first public blockchain US regulated banks have tested on, and the first to support bank minted tokenized deposits on a public blockchain, and also the first core banking system built on a public blockchain. So Morgan, thank you so much. Very excited to have you here. And I will let you tell us what is Provenance Blockchain Foundation.
Well, thanks so much again, Annelise, for having me, and thanks to Arca as well. So I think Provenance Blockchain, as you mentioned, is proudly public. We are a public chain that is part of Cosmos ecosystem, and we can get into what that means in the implication. But really, it means we were specifically built for financial services applications, so institutional and regulated finance, and really supporting all aspects of the digital asset lifecycle, from origination to servicing, financing, trading, and securitization, all the things that happen to a financial asset. Happens on Provenance. And we're here because we really think it's for the first time we can finally re-architect the financial infrastructure layer, meaning enabling instantaneous bilateral settlement across two parties that don't have to know each other, right? And a lot of financial services today really is highly intermediated, and it's intermediated because you're not sure if the buyer has the money and that the seller has the asset. That's why we have things like T+2 settlement, and blockchain enables that instantaneous bilateral settlement, which strips away a lot of the counterparty risk that eats up a lot of capital, and you can enable finance to happen much more efficiently, as well as create new products. So we're really excited. There's a lot of business value that's being delivered by blockchain, and it's our role at the foundation to help support financial services participants, institutional ones, use blockchain for business value and for their customers.
Fantastic. And I think that you've done kind of some of the first buy-side-ish transactions. And I think in the world that we have today in our ecosystem, we have to develop the secondary market. And once that's developed, I think we'll have more of a primary market. And you've been able to actually kind of sell off in the primary market. So I'm focusing on the buy side. I thought we could talk a bit about that today. So you had made inroads with institutions, which are hesitant, and you have the risk compliance department to work with. So can you talk about that? How did you kind of get into institutions and get them comfortable?
Yeah, absolutely. And the genesis story of Provenance, it was built by Mike Cagney and his wife, June Oh, because they knew banks would not be first in to adopt a public blockchain to do their business. So they built Figure, which is a fintech company, on top of Provenance to showcase the value of blockchain across three highly intermediated verticals. So the first is lending. The Figures put mortgages and HELOCs on chain, originated over 4 billion of HELOCs on chain to date, as an example. They've put private assets on chain, so private company securities, Series A, B, C companies, as well as private funds. So we just announced Hamilton Lane as an example as the first 40 Act, so the first registered investment fund to natively issue LP interest on Provenance. And so the reason why, and payments is their third vertical that Figure has built out, and that's brought in almost 60 financial institutions to date that are either buying the asset, selling the asset, participating as a validator, and that includes banks, as you kindly introduced. And so there's many considerations to get assets on the chain. The first isn't even technical, actually, it's legal. And that's why Mike started with mortgages and HELOCs, because mortgages have a digital version before, blockchain called an e-note. So instead of a piece of paper mortgage, you could issue an e-note form of mortgage protected in law. And so that means you can natively issue that e-note with a lot of the protections in legal code already. And there have been a range of advancements in UCC to broaden the level of assets that you can put on chain. So that's one aspect of how institutions get comfortable. The second is the business value that blockchain brings to buy the assets. So what do I mean by that? When Figure originates a HELOC, and by the way, they've white labeled their HELOC process, and we just announced Movement Mortgage is using Provenance to issue HELOCs, which is really exciting, using a white label of what Figure has built. And basically, once you put the HELOC on chain, what you're really putting on is not all the information, right? We don't put PII on Provenance. That's what I meant when I said it was designed for financial services. You keep personally identifiable information off chain. But what is on chain is the digital fingerprint of the credit file that Figure has approved. And basically, Figure can then provide that footprint, the fingerprint, to a buyer of HELOC. For example, an Apollo who has bought mortgages on chain, on Provenance. And basically with the private key of that digital fingerprint, the buyer of the asset can see all of the elements of the credit file easily, digitally. They can sort by FICO, they can sort by zip code, they could sort by size, et cetera. And it allows them to much more easily. They don't have to look at all these documents. So securitization becomes much more efficient because you sealed the credit file effectively with a bow when you digitally originate it. And so then when it comes to securitization, you don't have to validate that information is correct. It is sealed with a bow. It hasn't changed. And therefore, the person buying those loans can be very comfortable what's in those loans. And it's all done, of course, then digitally. So that hopefully gives you a sense of why, buyers of assets would come in. And it allows much more programmatic ABS. So Figure's worked with a number of different banks to really, because Figure is an originate to distribute model. And so enabling people to buy those assets very seamlessly is quite important and a benefit of blockchain. So it really accelerates that risk transferal to people who want to own that loan, as an example. And by the way, you see real-time payment information of all that portfolio, that loan portfolio. So you have real-time information instead of getting 30-day or 60-day afterwards performance. The today's performance of the loans you're considering buying. A lot more transparency as well.
So when you buy at the time of origination, you have all the credit information at that time, but then there's an ongoing surveillance function that you have information that's coming in as well.
Absolutely, real-time payment status of those loans and performance.
That's where the market will go. So it's great that you're carrying the torch to get it there. Yeah. So here, operating at scale. So it says Provenance blockchain is currently leveraged to more than 50 financial institutions and has supported over $10 billion in transactions. So can you tell us, outside of Apollo, what type of your 50 financial institutions are?
Yeah, so they've a lot of credit unions have come in and bought assets, firms like GIC as an example. So people that want to own the lending portfolio have stepped in. Other banks have bought the loans. It's a broad set of participants on the lending side. And then on the private fund side, so we have 16 funds that have listed, and I mentioned Hamilton Lane, many other large ones coming soon, which we're really excited about. So watch this space. But basically, we've built a portfolio of about 1,000 accredited investors as an example, because these private funds, you need to be qualified and accredited, and we can passport that accreditation, right, as well. So again, as we think about what blockchain enables, it enables that wallet to be qualified effectively by by, let's say, an Apollo or a Hamilton Lane, and then other they can use that accreditation to buy other funds as an example. So we built up, home family offices, people that can high net worth, ultra high net worth folks bought these private funds. And as we add more assets, we broaden the set of investors. As we add more private funds, more private credit, we're working on infrastructure assets, and that will bring in pension funds and insurance funds that want those longer dated exposures beyond banks. Banks typically are the ones that are holding infrastructure funds, right? But they can only hold so much. It takes up a lot of their capital. These are high return, good return assets, low probability of default, right? These are bridges, roads, power companies. And so again, blockchain makes previously illiquid assets more liquid, and meaning more price discoverable, more easily transferable, easier to originate and maintain those assets, right? So a lot of times private assets are sitting in a lawyer's cupboard, right? The file and the ownership record. And blockchain makes it much more easy to discover and transfer and buy, and therefore creating a broader set of liquidity. You can also drop the minimums for some of these private funds because it's easier operationally. So, instead of $1 million, it's 100,000. And because you can open up secondary liquidity, usually you'd have to hold that asset for 10 years before you can think of seeing some of the returns. But now the originators of these assets, private assets, can open up liquidity windows in 3 years, 4 years, et cetera. And that broadens their set of investors that have the capital, sufficient capital to deploy. So a lot of benefits: fractionalization, lower minimums, broader secondary liquidity, more price discoverability, and bringing in new participants that couldn't previously access those assets easily.
So liquidity, which is actually what I wanted to discuss, and we're getting to it now after all that. So are you finding, do you have a secondary market that you have created? Are you finding that people actually are trading on the secondary market? And what types of assets? Obviously, when you launch funds, there's going to be a holdup for a period of time, but is that actually happening today?
Yeah. So, for instance, Figure actually demonstrated it's sold. Figure is not a public company. They last raised a Series D last year. They have opened up trading windows for their employees, et cetera, that have allowed other buyers to come in a free market for 7-day period to buy that privately issued security. And so there's been something like $100 million worth in secondary liquidity sales, as an example. And blockchain enables counterparty agnostic marketplaces. This is really foundational, right? You and I, Annelise, can rock up right now and transact. If you have the asset and I have the digital form of money, preferably bank minted tokenized deposits that we support on Provenance, called USDF, issued and minted by banks on behalf of their customers. But so we have seen some secondary trading. I think it will take time for that to develop en masse, right? As we get more assets on, as we plug into other distribution outlets, as we get more wallets qualified. But there's about 17,000 wallets on Provenance today, as an example, that will continue to grow. And as we do different use cases, for instance, we're working on a bankruptcy claims use case. That could broaden a retail set of participants much more broadly. So as we take different use cases, we'll extend. And Figure has an ATS that's approved by FINRA for blockchain native securities. There's many ATSs out there, but not that many that are accredited for digital securities specifically. And so we're working to bring in other asset classes that could use Figure's ATS, but use a marketplace on Provenance. So marketplaces, early-ish days, but yeah, 100 million in secondary liquidity.
So on your ATS, have you actually transacted on the ATS outside of Figure's stock?
Not yet. So we'd love our first use case of somebody that has a natively digital that wants to trading, please come chat with us. So thank you. Not yet. We're working on it. So,
and then are your loans trading hands on the secondary market, or are you finding that once older?
Yeah, the loans definitely are getting, so that 10+ billion figure, there's 4 billion origination, then there's securitization, there's warehousing, et cetera. Okay. So yes, most of those, almost all of the originated lending assets are definitely trading hands.
So how do you see that market developing in 2023?
Yeah, I mean, we're super excited. So Figure's pioneered in its vertical. So our job is to catalyze further adoption. So we're looking at commercial real estate and CMBS, given Figure's success in residential real estate and ABS. In the private asset space, we're doing a ton more in private fund space, because I think that's really the place where, again, it's something that's very accessible for institutions, because there can be a digital feeder channel, right? You have to walk before you run in blockchain. So, for many of the funds we're working with, it's one channel, but it will be the only channel in the future, right? So it's the add and then replace over time, especially as you can do more of the fund admin functions on chain, like net asset value, et cetera, which still have to happen off chain. We're looking at assets, like I said, infrastructure that should be launching in Q1. We're really excited. That's a $93 trillion business worldwide with a $15 trillion funding gap today. And again, that will bring in the pension funds and insurance companies in addition to banks. This distressed use case is exciting because it brings transparency to claims. We've seen a lot of high-flying bankruptcies, including FTX this week. And really that workout, you want the transparency around the workout. But with tokenomics, you can also add interesting upside for these holders and secondary market for assets that people have very divergent views on the value of, right? So it creates a real good buy and sell side kind of marketplace. And BCG and World Economic Forum have estimated illiquid assets will go from $0.3 trillion this year to $16 trillion in 2030. We really think, we're starting in these high friction opaque markets of private funds. Public market securities are fairly liquid, one could argue. I've been in dissenting opinions. People have given me dissenting opinions on that one, but everybody's plugged in, a lot of transparency in my view. So we're starting in a private asset space particularly. And so, yeah, we expect to draw in, we're purely focused on institutional regulated finance, and we'll create this network effect as we add other assets for both buyers and sellers. So we're really excited. And obviously we're global. So firms around the world are talking to us. We're replicating Figure's success in the US. Mortgage market is huge globally. So, many folks have approached us that want to be Figures outside the US as an example. So yeah, we're working on many, many interesting use cases, and also have a hash grants program to support developers that are building privacy dApps and compliance dApps and AML KYC dApps that make that asset lifecycle really sing for users.
So I love all of the debt that is being made. So I'm excited about the equity and the private funds, because I think that we're bringing life to that. But I also think there's a lot more we can do with debt. I think having securities and payment functions, it'll be a great, I think in 2023, we're starting to see, I don't believe that we're quite at an inflection point, but I believe that there's a lot more real use cases that are presenting themselves as opposed to proof of concepts, which were one-offs and didn't actually bring to life as much of the benefits that you can actually save. So
absolutely. We moved beyond POC, absolutely, and operating more at scale across different asset classes and crowding in. For instance, in mortgages, this is helping people go from 45 days to get a mortgage to 5 days, and a HELOC in a 5-minute digital process, and you get your money fully funded in 5 days or under 5 days in the case of movement mortgage. So this is really, and this means lower interest rate because it's cheaper to provide. There's 120 basis points in savings in the mortgage space, that digital end-to-end life cycle that Figure has been able to realize for their products. So that's real, that's a vastly improved interest rate for a consumer and better net margin for the originator.
And that 120 basis points, there haven't been enough programs developed to actually show what the true savings is. And so it's great that you can actually show this is how much that's being saved versus a non-natively digital.
Exactly. Check out our white paper on our website.
I love it. Okay, so I appreciate all your time. So what if you were approached by an institution that was interested in getting involved? How can they actually get more involved or learn more about?
Absolutely. And this is collaboratively building the future of finance, right? We will only be successful if traditional financial institutions blockchain for business value, right? That's where the balance sheets are. That's where the customers are. That's where the deposits are. And so really folks should reach out to us. Our website is provenance.io. They can find me on LinkedIn. They can connect with us on LinkedIn or Twitter at the foundation. And really, we work with institutions on what's their most impactful business case, right? All of your clients, Annelise, have different, obviously, shades of their business. So really, first step is prioritizing the business case in terms of the types of assets they'd want to originate or buy. Then working on the business process flow. And yeah.
Fantastic. I do find it's a collaborative ecosystem, and it has to be, because there's a lot of interoperability that needs to be pulled together to move this forward. And that's really all based in collaboration.
Absolutely. Absolutely.
So, well, Morgan, thank you so much for joining me today. And if anyone is interested or has questions, please reach out to myself or to Morgan. And we look forward to talking to you again. Thanks so much,
Annelise. Thanks, and thanks to Arca Labs. Thank you.